Hello, everyone, and welcome back to our next episode of the Let's Get Technical series. We are here today to talk about why is swing trading the best skill for you to learn. Now, remember, I'm talking about swing trading as a skill, not as an activity, because swing trading कर कोई भी सकता है, but swing trading अच्छे से करने के लिए बहुत मेहनत लगती है. If you want to be a swing trader, whether may it be on a intraday basis, may it be on a positional basis, may it be on a, I say that because ultimately, irrespective of whether you're buying and selling within the same day or over few days, few weeks, few months, or few years, you are ultimately doing swing trading. You are doing swing trading on different time frames, right? अगर आप long term investor हैं, तो what you are doing is swing trading, but on a long term basis. Why do I say that? Because even if you buy a stock for 5 years, if you're not buying low and selling high, what is really the purpose of buying the stock? What is the purpose of holding ownership in a company? Especially if you're an investor only and in the stock market, not for other reasons like it's your own company or you have ESOPs or it's tied to your employment, irrespective of those things. However, when I talk about swing trading in this specific session, we are talking about swing trading from a few days to a few weeks of holding. And why do I call it the best skill for you to develop in today's world? For that, let me take you to the chart of Abbott India. All right. So on this chart of Abbott India, what I want you to show is on this daily time frame. Okay. Now, I will show you some very simple observations as a swing trader on this chart. Let's make it full screen. Now you can see that between the period of, let's say from this bottom to this top, we can see a 40% move in the stock in a matter of 321 days, which is less than a year. Okay. For this purpose, I'm going to also maximize the price chart. Now, let's see what I as a swing trader would do here. I can clearly see that the stock has a tendency of taking strong support at the blue line. What is this blue line? This blue line is the 200 EMA of the daily time frame. Okay. And let's take a measure of the prices starting from the same starting point. And now I'm going to also change the color of this study so we can differentiate it slightly. Let's change its color so that it stands out to us a little bit more. So we don't want the border. We will keep the background to blue and we will change the label color as well to blue so that it stands out. And let's also add the lines so that you know exactly what movement I'm talking about. So this is the first move, okay? And how did I draw it? I drew it from the first point to the second point to the highest possible point. Now here we are obviously taking into consideration the best case scenario for both long-term investing and both swing trading. Okay, the reason is that it makes our discussion simpler. Now what we are seeing here is that the stock of Abbott India, for instance, here has given an upside of around 40% in around 1 year of holding, right? And that is since it started a confirmed uptrend, which was September onwards. Let's mark the other movement here. So we can see that the price broke above the 200 EMA, came back down to retest the 200 EMA. Now suppose he made a fresh entry here and we exited. This is 15% again. The stock came back down and stock went up again 19%. And now what we can see is the price has again come back down to the same level to start hopefully moving up. Now we don't know where it's going to go, so we'll not take into consideration. But on the basis of what we are seeing right now, let's do a quick calculation of where our returns stand. Okay, so before I move forward, one little pause. I can see some people are having issues on YouTube. So there is a backup link pasted in the chat. Feel free to click that. It's of the Economic Times platform where I hope the quality is better. And after the live session, if the quality continues to remain really bad, then I'm also recording the session and I will be recording it on the YouTube channel. So don't worry, you won't be missing out on the discussion that I'm doing. All right, let's go down to the calculator and do a quick math here, right? So we see 27%. It's 28 when we round off, but let's take the lower round off. Next, we'll add the 15%, and next we'll add the 19%, right? So what happened here? Buy and hold strategy only for this upswing that we've seen so far has delivered around 40% in the best case scenario over a period of around 1 year. Whereas if we are a swing trader, if we've done swing trading, then what results are we seeing? We are seeing a net of 61% that do not participating in the downside. Why are we not participating in the downside? Because we want to focus our skill sets, we want to focus our attention on mastering one type of trading, that is a long side trading. When it comes to short side trading, the game changes, the rules change, and your analytical or your strength also gets divided. We don't want to do that. There's a reason we are not doing any kind of options trading or futures trading. We are only talking about trading in equity with a holding period of 5 days or 1 week to few weeks, with a return profile of targeting minimum 5% to 40% in every trade that we participate in, right? This best case scenario suggests that in a period of 112 days, the stock of Abbott India, and mind you, Abbott India is a large cap stock, okay, which means it's a massive stock. It doesn't move very fast a lot. Even if this stock is giving a 20%, 27% return, 112 days is around 3.5 months, 27% returns in 3.5 months. You exit if you enter optimally on the basis of analysis. As I just showed you, a simple support from the 200 EMA can also be your guide in some cases. It's giving a 15% return in the second case in just 1 month. You exit it in that period that you exit from Abbott India, you can go and find another opportunity. That's what I do for myself and my clients. We churn our capital, right? So in a month, we make around 15% around in Abbott India. And then when the stock is back to retest its support, we look at the momentum analysis, we look at the volume analysis, we look at the moving averages, where the key supports are. And when we see that the reversal is coming, we purchase the stock again with a very small risk reward, with a huge risk reward ratio and a very small risk, to make 20% in the next 2.5 months again. So what happens here is that so there is a very valid argument against swing trading, that your transaction cost goes up and your tax payout increases. Obviously, because the long-term tax, capital gains tax, is a lot lower than the short-term capital gains tax, right? But here your return profile is increasing a lot. And long-term investing is a very good idea, especially for people who have a lot of capital to constantly keep buying stocks. So for them, people who have more like crores and crores of rupees, multiple crores, or at least more than 10 crore to invest in the stock market, they don't really need to worry about churning their capital to grow their money faster. But if you're somebody who is not an HNI, who has less than 10 crore worth, then using or developing the skill of swing trading can lead to exponential gains. However, that being said, I have to tell you that it's not an easy skill, because when you go to swing trade in the stock market, you cannot trade on the basis of just one observation. Now, in order to make this example very simplistic, I've given you the example of exponential moving average, okay? But in reality, when I do the swing trade in this stock, for instance, Abbott in Abbott India, I actually do trading very frequently. Let me go back and open the spot chart, because I've opened the futures chart, so you're not able to see any of my markings and drawings on the chart. All right, so this is the Abbott India chart, as you can see. Okay, so this is the 75-minute time frame, and you can see that there is a lot of trading data captured here in the form of these green and red dots, and there is a lot of analysis, trend lines, more indicators available here. You can also see some of the pins which indicate where I have given calls to my members to enter and exit the stock. Now, obviously, even though I am talking about swing trader, I am myself a learner of this art. However, I would say that compared to any other retail trader out there, I would consider myself to be maybe 5 steps ahead, even though I have miles ahead to go in perfecting the art of swing trading. Despite of that, what I have seen that if I treat swing trading in the stock market as a full blown business, okay, so what are we trying to do in the business? We have a very limited capital to begin with. You can start any business from as little as 2-3 lakh rupees, right? Same goes with, or not any business, there are businesses that can be started with a very small capital of even 2-3 lakh rupees. Same goes with swing trading in the stock market, okay? The difference is that in swing trading, you need very specific knowledge. What do I mean by specific knowledge? You need to know about technical analysis. You need in-depth knowledge of technical analysis. For me personally, I have seen that even though I started off in the corporate world, I started analyzing or doing technical analysis when I was in high school. So it's been nearly 12 years since I have been practicing this. And over the years, having studied the field, having practiced, having studied charts for like, I don't know, maybe more than 20,000 hours in this lifetime, I can say that I have developed an in-depth intuition. And this in-depth intuition is helping me manage not just my portfolio, but my family's portfolio and now my clients' portfolios as well. So if you are somebody who's doing technical analysis on their own, I'm going to tell you at the onset that it's not as easy at it as it looks. What are some of the things that I look at in order to do swing trading in the stock market? And if you are interested in becoming a swing trader full-fledged, if you want to learn from me, then you need to join my Telegram channel. I'll be sharing the link in the comment and more information about that at the end of the session. But if you want to develop the skill set on your own, then what are the topics that you need to begin with? What are the topics that you need to gain expertise in and why? Okay, I'll tell you about that now. So the first thing is volume, okay? So what is volume? You see this tiny little drawing on my chart at the bottom. So this is the volume. These faded out lines are actually the volume bars, okay? I keep them a little bit transparent because when I do my volume analysis, I don't use this raw volume data anymore. I have graduated, or rather I have upgraded my volume analysis to using this MACD histogram of the volume data. So volume analysis, volume profile analysis is one skill set that you really need to develop. Why? Because volume tells you a lot, okay? It's like that silent whisperer that will not scream out, but it will tell you very important messages about how strong the trend is or whether the trend is going to reverse or not. Now, again, volume analysis on the basis of a single bar doesn't work. You need to take into consideration the volume analysis of the past 2-3 strong uptrends and downtrends, and then you need to analyze what the stock is showing right now makes sense or not. Then, after the volume analysis, you also need to achieve a strong hold on some momentum indicator. I personally prefer to use RSI, which is what you're seeing at the bottom. So this is the RSI chart, and you can see there are multiple lines of multiple colors. So this is called superimposition. This is something that I have invented or come up with myself because I really felt getting an idea of RSI from different time frames would improve my analysis, and it has improved my analysis. My entry has improved to the point where I can claim that I give entries and stock ideas at near bottom to my members of the Trade Together program, which is nothing more than a swing trading recommendation membership, where if you subscribe, you get a certain number of active positions at any point of time. And within that, I tell you exactly how to manage the risk. That is what stop loss you have to maintain, what risk reward ratio is being offered by the trade setup, when it's a good time to revise your stop loss, and exactly what level you need to revise your stop loss to, how to use bracket orders. And I also give you a small remark so that, you know, if you're interested in knowing what was a technical stimulus that made me give the idea to you. Now, there's always a bunch of it. So I share, you know, in few words, few lines, those impulses. So momentum indicator is the next thing that you have to achieve a stronghold in. So I personally, what I have seen is that doing momentum analysis in combination with volume analysis and price action analysis gives me a pretty good indication of where the market or any particular stock is going to move, right? Next thing that I like to look at is the exponential moving averages. So I primarily use 4-5 different moving averages, starting from 20, moving on to 50, 100, 200, and 500. Now there is a math of periods of, okay, because again, it's very important to know where important support resistance are being formed. So support resistance is the next thing that you need to have a very good stronghold on. And for the purpose of support resistance, merely using a formula based or generated support resistance is not good enough. You need to refer to multiple points or multiple strongholds for support resistance. So if you're just seeing a pivotal support resistance and depending on that, it's not going to be enough. You need to make sure whether there is a key moving average passing through the price, um, on a particular time frame. It may be on the 15-minute, it may be on the 75-minute, it may be on the daily time frame. But if it's a major EMA, that is a 200 or the 500 EMA, then it is going to have an impact on the price of your underlying. And if you're not mindful about them, you will either be missing your entry slash exit or you will be setting wrong stop losses. And I will give you an example of that. So I gave a stock idea to my members in one of the stocks, and in the market volatility that we experienced in the last few days, right, the stop loss that was given to my members was missed by mere 30 paisa points. That's it. That is 6 ticks. So if the price had fallen down just 6 more ticks, my stop loss would have been triggered, but that did not happen. And why is that? Because when I set the stop loss, I took into consideration a lot of points which are very important to make sure that your stop losses also don't get triggered unnecessarily, and at the same time you don't risk too much capital by taking a huge buffer on the stop loss, because if you do that, then your risk reward ratio is going to go against you. In addition to that, one more thing that I have already mentioned to you is the time frames. So if you look at my layout, so I prefer to use 6 different time frames. Out of these 6 time frames, 2 are very rarely used, which are the extreme time frames of 3-minute and monthly chart. So I refer to them very, very rarely, but they are still an important part of my setup. The most important time frame is the 75-minute time frame, followed by the 15 and the daily time frame respectively, right? The weekly and the monthly time frame help me establish the primary bull trend of any stock. Okay, so these are the things that you need to really be on top of to begin with. And of course, अगर swing trading कर रहे हैं तो psychology, trading mindset, strategy, stop loss strategy, target strategy, all of